Alright, boys. So, we had a hawkish Fed rise. Now, this was not my main expectation. I didn't get up to watch the replay of the, or snippets anyway, of the yelling. I actually thought it would come across a little bit dovish. Maybe I was a little wrong with that. I had some long US dollar index going into it, but I didn't. I wasn't expecting this. I was actually expecting a bit of US dollar weakness, a bit of buy the rumor, sell the fact, and I was looking to buy into that dip. So the market's gone straight up towards pretty extreme overbought levels. I mean, the market's already overbought now, gone even higher. This is sort of thing that it's hard to give recommendations on, right? So it's like, are you going to keep on buying at near ridiculous sort of overbought levels? Like anytime a daily's near 80, right, you're getting into trouble. As soon as some point there's going to be a 300 or 400 point pullback. Now it may not happen today, but it may not happen next week, but it will happen. So you're opening yourself up to that, and that's the sort of thing that can get you into trouble if you don't have proper risk management in terms of taking the loss. It's very hard sometimes to take a loss in such a strong trend because you're like, well, I'll just buy more. I'll buy some here. If it drops down to 117, I'll buy more. If it drops to 116, I'll buy more. And everything will work out. All right, that works out until it drops to 113, and then you're like, oh, okay, now it's serious. Now I'm down 30%, 20%. What do I do now? Oh shit, might as well buy more. But the ability to change your mind, to change with the flow, if you get stuck in a trade at the wrong levels, that's where you can really lose your account. So I would not suggest chasing this unless you're going to use some strict risk management. Buying dips is fine. The sort of dip that you'd be looking for would be substantial, probably back down towards that 116 level. That 116 level, it's the high from a few days ago, but more importantly, it's a previous support. Now that support should come into play again on any pullbacks. So 116 would be the first level that I would even consider buying dollar yen. And what I want to see happen actually is something on another pair first. So we'll get over to that in a second. So just to see what I'm looking at there, if you weren't watching the little intro when I was looking at it, this level here, this 116 level is huge back in the day. If you were trading a couple of years ago, you know what I'm talking about in terms of that support holding. When it finally broke, it led to a just tsunami of selling. Now that we're back above it, it's in a better place than ever. I mean, it's already had a resistance, broke it. Now it should form some sort of support for the short-term buyers, who want to buy the pullbacks. This is by no means safe, but it's a pretty good risk reward if it's just a generic US dollar sell-off that causes a pullback in the next couple of days from whatever level. So I'll be looking at that level. Better put that in as buy order. So just make sure I get filled. That's the sort of trade that I'll be looking to do in the next week if we get the opportunity. Now, first things first though is that we've got the euro in play. Now the euro is the big boy in the game, right? The euro is bigger than the dollar yen in terms of US dollar movement, US dollar strength. If the euro is doing something, then it's going to lead the rest of the market in the same direction most of the time. Okay. Now euro, it's 140, 104.65 level that it held twice so far is not just a random number. It is the low from the initial sell-off back in God, 200 units. We need more than that, mate. We need more. Okay, so the initial QE-led Draghi slump will do anything to help the eurozone sell off. Got all the way down to 104.65. That level's been tested twice already today. I suspect it will break relatively shortly, probably today or tomorrow. Now that leads the whole market to have a bit more US dollar strength, and so dollar yen may not turn just here. We may have to get flush out some longs who are still holding on hope, and then we can have a bit of a reversal as the market, does some end of year shenanigans. So in that reversal, I'll be looking to buy dollar yen dips, not sell euro so much. I'm not the biggest euro bear. I'm not, definitely not these levels. I'm not chasing too much. I don't mind selling at nice levels, but ECB can only get more, more hawkish from here. US Fed can only get, US Fed can only get less hawkish from here. In my opinion, I think it's, the market's priced in so much, and there's a difference between the euro and the yen. All right, now it's between the ECB and the BOJ. BOJ is offering much more substantive long-term support than the ECB is, and especially to long-term yields. Right, long-term yields are being directly supported by Japanese monetary policy, where long-term yields in the eurozone are not. And so yield, the big thing that's happening in the market, even though you can't see it in the FX, is the yields. 10-year yields broke 2.5 last night. Markets just pricing more and more rate hikes in, and the hawkish part of last night's meeting is that the Fed has gone majority to 3 rate hikes next year. So 3 rate hikes in 2017. That was the big mover. That was the big thing. And while the euro fell 100 points, dollar yen rallied 200 points. So dollar yen's definitely moving faster than the euro. But all things being equal, if the euro breaks 104.65, then dollar yen can continue to go higher. There was a short breather in the equity market. Now that can't be ignored either. I was talking to a few traders today that if you're looking at chart patterns that lead to bigger sell-offs, that's one of them. That is one of them. New high, sharply rejected. In a lot of big rallies that I've seen in the past, not just in FX, but definitely in the stock markets as well. That sort of rejection and reversal from highs is usually leads to a bit of correction. Now, the counter argument to that is that we're so close to 20,000. Why not just have a little sniff? Why not have a little taste of 20,000, see what happens? All right, nothing really negative out there. The market can latch onto. Just a bit technical pullback. Maybe we won't get the big pullback here at all. We might just get, a bit of consolidation sideways, and we'll go to 20,000. I understand that. I just respect that sort of selling, and I will not be surprised if we get a bigger pullback. Now, am I looking to buy? Yeah, but I'm not looking to buy unless we have a substantial pullback. 19.2, 19, even back to 18.8. So while that looks ridiculous, just remember so fast this move has been over the top almost. And it just takes a little bit of faith to be rocked in this whole Trump rally for this market to pull back substantially. A lot of it is on speculation. Yeah? A lot of it is on non-substantive, I mean, it's all good for him to say some things, but some of the stuff he wants to do is very hard for him to do. Unless Republicans literally change their spots in coming weeks, which might be the case, but I suspect he's going to have a lot of difficulty getting through massive fiscal expansion from a Republican Senate. Now, we'll just see how much trouble he has. And without that, do you have this rally? Maybe not. And if he wants to start a trade war with China, let's just see how the stock market reacts to that. That can't be positive. I mean, I'll be very surprised if this rally does not have hiccups. That hiccup is what I want to buy. That's what I want to buy on the dollar yen. That's what I want to buy on the stock market. And I'm not interested in chasing. I'm not interested in playing momentum up here. Might be conservative, but I just don't want to lose the money, right? Don't want to lose the money. Now, in terms of some of the other pairs that we're trading, we are looking at the pound. Now, the pound's been getting a lot of love out there. So there is some interest to be buying this dip, more so than any other pair against the US dollar. Yeah, I understand that. And perhaps the soft Brexit will be enough. But, why not buy this pound against something a little bit weaker? Why not, sell euro pound, buy pound yen? Um, those sort of things, those sort of trades make more sense to me than challenging the US dollar. Right, you challenge the US dollar when you have, say, you have a widespread reason to be challenging US dollar. You got some sort of Trump issue come up in the next couple of weeks. Yeah, you can buy a pound then, and that might be a nice little trade. But without a reason, you don't go against the strongest pair in the market. You don't go against the strongest currency, regardless of your feelings towards the pound. If you like the pound, just find something else to buy it against. Okay, there's no need to get involved there. The other big news is gold, and gold's wrecking accounts. Gold is wrecking accounts. So a lot of traders just buy gold. That's all they do, and they made them a lot of money. I can understand why you have the affinity, especially if you have some sort of gold nut, right? You just want to buy gold because you agree with the trade that it's going high. Now this sort of this sort of logic is going to get you in trouble when the US dollar's on a rampage and monetary policy is flipped. You can buy gold, but not against the US dollar. And gold has now broken that last key support, and I suspect we're going substantially lower. And I think it's going to go lower soon, right? Today, tomorrow. There is nothing really left. I have to go back a long time. Let's go back early this year. There's not much support all the way down. So we could be revisiting these lows very quickly. Gold is a little bit more aggressive than FX. And if the euro breaks at 104, then you're probably looking at 1120 to 1100 just on that alone. And then it's not too much further to get to those all-time lows. Then the people will be talking about, 1,000, right? 1,000 is the next target. Real big target. I wouldn't be buying here. But I don't know. I might have a sniff around at 1,000 if we get down there. I mean, gold will do really well if there is an issue in the market. Gold will do extremely well if there's an issue in the market. At these levels, gold's really attractive if you know there's a big bout of turbulence coming, right? If Trump labels China a currency manipulator, that will be good for $50 to $100 in gold upside. But I suspect he's not going to do that, and I expect he will do some sort of other, not so committal. Labeling. Now he's supposed to label China currency manipulator on his first day. He's got to do a lot of things on his first day, if you go by his campaign promises. But that's the sort of thing which might spiral out of control. You're already seeing anti-Trump rhetoric spike in Chinese news in the last couple of days. Particularly, they're concerned about him talking to Taiwan, but they're also starting to look at U.S. companies in China, right? U.S. companies in China. Talking about how they're monopolistic. That's hilarious, right? They're going to find Starbucks, I heard, for running monopolies, which is just, this is in response to the anticipated, US concerns about Chinese steel, Chinese rare earths, Chinese, nearly any industry where they're just outproducing every other manufacturer in the world at a cheaper price and is doing bouts of price dumping. Of dumping just of whatever product we're talking about. So China is, as a major exporter, has a lot more to lose in a trade war with China, with the US than the US does. So China is actually shouldn't arc up too much, right? They're in a position to try and negotiate a peaceful ending to a trade war much quicker than the US, I suspect. But we'll never know. I mean, you're not dealing with players that we've seen on the open stage that much. Especially, it's not that you don't have the same sort of diplomatic backbone that you do have in a democracy as you do have in a communist-led, very tightly controlled party. So, that perhaps just to save face in public, they might do a sign of force, and anything which they do, calculated or not, may lead to repercussions which they're unforeseen. And that's the sort of stuff I like to sell into, where there's an unresolved China-US trade war brewing, and it just gets worse and worse and worse. But you're selling early just because you expect maybe it gets worse, then it does get worse, and then the market's just feeding off its own negativity. And I suspect we're going to get one of those big sell-offs next year. After that finishes, yeah, maybe we can buy that and just get on with the whole US expansionary, buying the dips in general on stocks. But there's a lot of risks here, and so I'm not trying to warn you out of following the trend. It's that this trend is closer to the end than the beginning on everything. On everything, I can't see a single trade apart from maybe short Aussie that I really like. So short Aussies, I didn't get filled on my. I had a couple of orders of 75.50 yesterday, hoping to get filled. Didn't get filled on that. Had some nice data out of Australia though today, so perhaps we'll get a nicer level, 74.40. But once again, if the euro breaks its key level, Aussie's going lower, and perhaps we have a couple more days of US dollar strength left before the next pullback that we can use to enter. Yeah, paying swap is something. You got to keep that in mind when you're involved in any product. Many products end up being around a pip a day. Their brokers are trying to make money from something. They're not making from spread these days, so if they can get it on the back of on swap rates, they will. Let's have a little bit of research, guys. That's enough of a opening rant for me today. We'll see how the banks are interpreting this hawkish Fed rate hike. Hopefully we got a little bit of a view here on dollar yen. We'll do straight up off the bat. We'll have a look at a few different banks just to see if everyone's in line. I haven't read anything yet which is contrarian. I think I'm the most contrarian out there. It's I'm extremely skeptical of this rally. Perhaps I haven't fully come to terms with Trump winning the election yet. Alright, so the big thing is that the dot points, which everyone was really looking for, has shown that we're looking for 3 rate hikes next year. And previously, there were only 2. Actually, people are starting to talk about March, right? They're starting to talk about March as a live meeting. It's going to be on the cards. They're going to be, potentially rising in March. Settle down. People don't understand, if you haven't been trading this market this year, this same story was happening. This is deja vu. We're having this same story December last year, right? And then, it took a whole year for the Fed to raise rates again. I suspect the first sign of trouble, that will be the dovish Fed that we've known to come in love in the last 8 years. But 10-year bonds better reverse soon, otherwise we've got a serious problem. You got so much strength coming. 10-year bonds, right, just US bonds in general, are starting to cause huge problems for the emerging markets, who price a lot of their stuff in US dollars. Right, a lot of their fixed income, a lot of their funding is in US dollars, and if the interest rates are going up in the US, they're going up for the local currency, the local economy as well. It's really quite dangerous. You could have emerging market crises around the world in some of the weaker currency countries for sure. Yeah, dollar yen up, gold down. So this is a 10-year yield and gold. So remember, bond markets, when yields are going up, bonds are getting sold. So what's happening in the bond market right now? There's a huge sell-off. You got to remember that. Huge sell-off in bonds, yields are going up. Norway just do? Norway kept rates the same. Swiss National Bank kept rates the same earlier today. Alright, I was just talking about emerging markets. Let's have a little look, a little closer at emerging markets. Yellen was a little bit cautious on Trump too, though. She did suggest that you don't need more fiscal spending right now. The tantrum is starting. Interesting opening. We had the lowest yuan rate set today since 2008. Yuan's approaching $7 yuan. Dollar CNH. Dollar CNY, sorry. Dollar CNH is already heading towards it real quick. Euro holds the key to the short term. Yeah. If Euro breaks previous lows, everyone's thinking the same stuff. This is a little dangerous when everyone's saying the same stuff. I think everyone's watching the Euro chart right now, right? Well, most traders I know, wanting to know if this US dollar strength is going to continue. It's all about that. You know what? Let's have a little. I suspect we're going to break. Let's have a little bet on that. Alright, boys, we're getting in a sec. I sold, friend. I sold. Short stop though. I just want to break 104.60. If I get stopped out, I'll probably have another go. 105.60. And the dollar index that we're in down here, while we're just waiting for these reports to load. Yeah, we're in no man's land now. We've got some room to the top side. I was talking about buying that dip, boys. This is when I was away on holidays. I told you I put that rate limit in. We talked about it a few times. Buying that 100 level, which was the previous resistance, turn support. Worked out beautifully. We got daylight. We got daylight to the top side here. So this is a nice. I think US dollar's got a fair bit of room to move. It's just I don't want to get caught in any shenanigans. So I love being long dollar yen. I just don't want to buy after 280 pip move on a well anticipated rate hike in December, going into Christmas. Call me crazy. Call me crazy. I don't want to do that. Alright, have a little look at Barclays. Yeah. Yeah, no, brokerage charges swap on nearly everything. So that is why I could get that removed, but I have to trade bigger. So it's okay. I'll look. I don't usually hold things that long. That it becomes a thing. That's about pip a day. But they'll roll it over for me as well. So yeah, no, it's you can definitely still get places where you don't pay swap, but there's not many left. Not many brokers. Like I said, everyone's trying to make more money. That's a boring report by Barclays there. Yeah. And so she said this line, which got a little bit of airplay. At this point, fiscal policy is obviously not needed to provide stimulus to help get back to full employment. Full employment seems to be pretty close, right? According to the official numbers. Unofficial numbers might be substantially higher, but she doesn't think they need it. There's a few things which really the market latched onto. Small stuff, but really, you know, everything was combined, added to a much hawkisher than it could have been. It could have been much dovisher. So, unless they reverse a little bit, back off a little bit, which you might get in the next couple of days. You might get Fed speakers coming out saying market's got ahead of itself. You might get some of the doves coming out. I suspect you might get some of the doves coming out saying, "Don't get ahead of yourself." So Dansky, they believe two rate hikes. Now their view on why they're going to two rate hikes, is that the membership of the Fed, which changes each year, will turn towards being more dovish. The Fed has previously delayed raising rates when there's been turmoil. And my personal view, like we said earlier today, is that Trump's going to bring heaps of turmoil. How Trump goes about getting the infrastructure spend done is going to be hard to do in his first couple of months, that's for sure. Alright, so June is the next fully priced in one. Yeah, I think we really need to see some inflation come through. If we see inflation, then you can see the three rate hikes. All right. Nothing too crazy going on here. Well, this is pretty interesting. I might keep this for later. It's good to have a little knowledge of who is changing, who's coming in. It's easy to lose. It's easy to forget who's actually a voting member and not. I do all the time. Keep that in the back of my mind. I'll keep that report in the back of my mind. Yeah, if oil rebounds, then inflation definitely could come through. Wage growth is still very slow. But these PMIs, China in particular, solid picking up, right? Um, this is definitely noticeable. You know, things are getting better around the world. So that needs to roll over again if you're going to get that turbulence. Not a bad report there. Not a bad. I should read a bit more of those guys. Put them in the cycle. Okay, guys. So let's keep an eye on Euro. That's the way I think you need to be focused on that next session or two. If it breaks, if we're sitting here and tomorrow it's at 104, 30, then you got more downside. If we have a big bounce up, okay, then that's going to impact the dollar yen. So if you want to know why your dollar yen's falling, then just check what's happening on the euro. Okay, guys. Trade safe. It's going to be a pretty hairy next couple of days. I'll be back on Monday. I'm not streaming Fridays this month. I'll be back on Monday, but I should be around in the room. If you just send me a PM, I'll be able to answer a couple questions for you. All right, good luck.